Alrighty guys, let's go ahead and talk about how to gain momentum as an investor. So there's 3 types of momentum that I believe are super relevant to leadership, to investing, to all these different things that we do as entrepreneurs and business owners. So let's go ahead and break them down. The first one is called personal momentum. Whatever you're doing, whether you're learning how to become a better leader, whether you're learning how to become a better investor, or you're just scaling your portfolio, you have to start gaining momentum. Momentum is what differentiates you from all the other people that are in the marketplace. Not everybody can attain momentum. Some people can have enough energy or enough motivation to do something temporarily, but they often don't have enough motivation and energy to do something for a really long time. Let me tell you, it's always easy to be motivated for a really short amount of time, maybe a week, maybe 2 weeks, maybe 6 months, maybe even a year. You can be motivated, right? Motivation is temporary. But then you have to get to a point where you're disciplined as well, because maybe after 6 months, you just don't like doing that thing every day. Maybe you don't like following those rules or that plan or that strategy, right? This is where consistency and discipline comes in, because that's really what's going to save you in the long run. Motivation gets the ball rolling, but the thing that really gets you to a point of momentum is consistency. And that way, when you're making those same actions day after day after day, you're being consistent with your investing, you're being consistent with your risk management, you're being consistent with all the different things that you do as an investor. Now you've attained momentum. Now you've gotten to a point where momentum is now beginning to carry your investment. It's no longer a one-to-one return, meaning that every time you perform one action, you get one outcome, right? We want to get away from a one-to-one return. We have to use leverage. And the way to use leverage is, my favorite way is technology, by the way. But besides technology, you can start leveraging other people's time. You can start leveraging other people's efforts, other people's money, right? Now you can start scaling your investments because you've begun to attain some sort of momentum. Personally, you have to get to a point where you've achieved momentum as a person. As an investor, let's say, okay? You've started investing into all these different things. You started finding some things that work. You learned about all these different investments. And now you're like, okay, well, now I want to invest into this thing, and I want to invest into that, and I want to add this to my portfolio. And you know what? I'm also going to start diversifying. So I'm going to start diversifying into all these different industries. And even within those industries, I'm going to start diversifying even further. That makes it really interesting for you as an investor to be able to identify, okay, when I invest into this thing, I make X amount of money. When I invest into this thing, I make this amount of money. And so that allows you to predict your momentum. Momentum gives us predictability in our business, in our investment portfolio. If we know that, hey, we're moving at this rate, we're moving at this pace, so over the next 6 months, we're probably going to be somewhere within this range, that gives us predictability for our personal life. If we know that every single month we make $50,000 from our investments, well, it's probably not going to change too much if we've built our portfolio correctly. Now, the key to all of this is building your portfolio in such a way where it's stable. So even if the market changes, even if things go completely awry in the market, even if the market crashes, if the economy just melts, nothing is going to happen to your portfolio because you're protected against all these different things that can happen. You're protecting yourself in such a way that gives you momentum. And now we get to the next step. When you get past personal momentum, you start bringing other people alongside you. Okay, well, now you're starting to use a team to manage all this because you have so many different investments producing for you. You've achieved so much momentum in your investment portfolio that it's actually beginning to become hard for you to manage everything alone because you have so much money coming in from all these different investment streams. Now it's getting a little bit tough to understand your cash flow, and you have to understand your cash flow so you know how much cash on hand you have, how much dry powder you have to invest into new investments, how much of that do we have accessible, how much are we going to need next month. So now you start employing teams. Now you start bringing other people in, other people who are going to help you manage that entire process. And sometimes it could be as simple as 2 or 3 people, but every person has their own department to manage. So let's say, for example, you're heavily invested into real estate. You might have houses all across the country. You might have some in New York, in Seattle, in Los Angeles, in Miami, in Texas, wherever your investments are, you have this real estate portfolio, but it's not quite to the point where you need a manager in Florida and you need a manager in New York. You're not quite at that point. You're only at the point where one person could actually manage that entire portfolio for you. That makes it better for you to actually just hire a couple people, and that one person could lead the real estate sector. Now you're building more and more momentum because as this person is managing your real estate sector, you're free to go out and find more deals. You're free to put together the best opportunities for your team and your portfolio, right? Now you also have somebody that's managing your mining operations. Let's say you're you're mining cryptocurrencies, right? And you might be mining in several different farms all around the country, maybe even internationally. Everybody has their own approach to it, but you may need to have somebody that's helping you manage all that, because you're not going to be able to go out and see every single farm, every single facility on your own, because that's going to take a lot of time. I do that selectively. I pick and choose in my investment portfolio which investments I want to go out and I want to see them in person, because for me, it's really, really important, at least initially, to monitor investments closely. When I'm monitoring investments closely, that gives me that personal momentum. And then when I have a team in place, I can quickly hand that off to my team, because my team already knows, okay, when we get something, this is exactly what we need to do step by step. They're already experienced. So now I'm building something called corporate momentum. So I had personal momentum. That's step one. The second step is corporate momentum. Corporate momentum is when we start working with teams. So I have a guy that's managing real estate. I have a guy that's managing all my crypto mining. I have a guy that's managing my oil wells. I have different fields that I'm drilling oil from. I don't want to go out there and manage them, but I have somebody in place that does that for me. And so that gives me the flexibility to identify more deals, to look for new investment opportunities that maybe I haven't even heard of. And I'm able to go out and do that because I have a manager in place that's managing. So that's corporate momentum. That gives me more stability as an investor. And now we build something called legacy momentum. So legacy momentum is the third step in all this. And legacy momentum basically is when you have everything running, you don't even have to be a part of it anymore. So now, even if I were to go away as an investor and no longer be active in the organization whatsoever, I have somebody else that's leading the organization, and now that brand has become a standalone thing. So Zelan Investments or Zelan Capital could be producing money even if I'm not there, because that portfolio is no longer dependent on me. So the final step in all of that is actually the separation of me from my portfolio. I want my portfolio to perform on its own. I want it to produce income month after month after month, and I want my teams to be operating everything, and I want it to go on for generations. I want to build generational wealth with it, but I have to be able to separate myself from it, because if I'm not separating myself, that puts it at risk. So if I ever leave, or if I ever focus on other things, that could put my portfolio at risk if I'm too attached to it. So we want to build legacy momentum. That's the last one. So we started with personal momentum. We went on to corporate momentum, which is number 2. And number 3 is legacy momentum. That's when we build something that lives on way after we left the organization. The organization itself, the portfolio at this point, literally has its own identity. It's become an entity of its own. Don't spend your whole life building something that then is just not going to outlive you. You need something that's going to outlive you for generations and generations, because truthfully, it's not easy to build a really solid, balanced portfolio. It takes a lot of time, it takes experience, it takes money, right? So don't let that go to waste. Make sure you're building it in such a way where it's living on for hundreds and hundreds of years. We want it to live for centuries. All right, guys, make sure you like, comment, and subscribe, and I'll see you all in the next video.